Now, hearing that, the type of business that you're running is going to feel really foreign to a lot of people.
Yes.
Doing that as your day-to-day and having this team of people who are acquiring and managing and rehabs for you and just all that kind of stuff. So let's take a step back for a second.
Yeah.
I don't want anyone to begin to think that what you're endorsing or what you've created is unattainable. So let's try and make it tangible. And the first place to start, I think, maybe the first mental block some people have to this, to me, I think, is probably what's the status of multifamily in the current market we're in. Because the market we're in, let's be honest, it's squirrely any way you look at it. Things are fluid. They tend to shift and change. And anybody who's planning in the residential arena can certainly know that. And I don't have my finger on the pulse of the multifamily. You do. So take a moment and just kind of help people wrap their minds around the state of multifamily right now in the current market.
Absolutely. And keep in mind, we started out with our first deal. When we bought that first deal, it was my wife and I in an office in our house, before we had, and running the same style operation of doing fix and flips and, buying our first building. And my wife still manages our first building that produces, $7,000 to $8,000 a month, and she spends 3 to 4 hours on it per month.
Just a few years ago.
That was 2.5 years ago.
Yeah.
So keep in mind that, I don't want to project that we have a massive operation. We literally started like everyone else in this business. But multifamily right now, the beauty of it is that obviously it's performing really well. If you look at the news and you look at the data, it is somewhat competitive on the larger scale, but I'm a big believer that in any market, up, down, or sideways, you're buying a business when you buy a building. You're not buying what your neighbor's house sold for or what your buyer's credit score can get approved at. It's a lot different. So it's all numbers driven. So in any market, I truly believe up, down, sideways, you can go out if you're diligent enough and find that one deal a year that will put you on the path to total financial freedom. We tell people that in this business in 10 to 15 years, you can basically achieve the freedom that you want. So the market right now is strong. The rental demand is through the roof, and that's from a national level and in most cities throughout the country. When you dial down, you're going to see vacancy rates declining to, pre-recession levels and better than that. We're seeing some markets, if you look at New York City, vacancy rate is like 2.2%. But even in markets like Cincinnati, where we're active, Chattanooga, Tennessee, these are areas that are performing at like 4 to 6% vacancy rates, which is extremely, low and great for landlords. That means you get to raise rents in environments like this, which increases the value of your property.
Okay.
Does that make sense?
Yeah, absolutely. I know that rentals are increasing as foreclosures are increasing, and you touched on that.
Yeah.
Do you think that the potential of the REO to rental market that we've been hearing so much about how is that playing into things?
That's a great question, and something that we debate in the office a lot, and we keep an eye on it because it's never really been done successfully before, because you don't necessarily, and I'm not saying it's not being done and people are going to do very well and make a lot of money buying pools of single family homes, but the reality is when you look at the stats, apartments have been and will always be the number one choice for renters. It's a total different animal. Do I think it's important to understand what that kind of shadow market looks like within your sub-market where you're investing? Absolutely. We're big believers in really getting intimate with the markets that you invest in, and understanding if you have an extremely high foreclosure rate, what you're competing with and how many single family rentals there potentially are within your market. But we don't get that concerned with it. Again, we're not institutional investors that have billions of dollars to spend and need to do, dozens of deals a year. Our job is to focus on finding really 2 to 3 really good deals a year. And I might look at 20, 30, 40, 50 deals in a month to get to that one deal that's worth our attention. But when you create a system for, those 20, 30 deals can take you a couple of hours to sift through.
So I guess a big part of what I'm hearing you say here, and I'm kind of pulling back different pieces of what you just shared in the last couple of minutes, but due to the rental demand that's continuing to increase as, people who were previously homeowners now have to rent. You've got more people coming into the market. You have more demand. So the natural thing is you have more opportunity. And of course, that's going to affect both single family rentals and apartment rentals. Touch on the state of availability of good quality multifamily properties in the current market.
Deals. It's like anything else. The thing about multifamily is there's not as much volume, obviously. They're not a dime a dozen like, the starter, the 3-bedroom, 1-bath house that's floating out there in terms of finding. But again, it's a function of you don't need to do dozens of deals to achieve the results you need to. So we're big believers on, a top-down approach as opposed to a bottom-up. And what that means is we identify markets first, get really intimate with the market, see what type of inventory is there. If I'm looking at a market and my niche is, let's just say right now 80 to 200 units, and when I'm getting familiar with the market and speaking to brokers and I see only 2 or 3 listings that have come out in the last 6 months, probably not going to spend a lot of time on that market. I'll put my resources together and move on to a new market. So we want to be in a market that's going to provide deal flow, obviously, and that's a function of knowing your market first and then building out your relationships and your teams and deal flow there, as opposed to saying the entire country is my market. Wherever a deal comes from, then I'm going to figure out the market. That's how people get hurt really bad when they're starting out. We're big believers in teaching people how to find markets, build teams, see what the inventory is like, understand if there's deal flow to support your strategy first. Because one market might not be good for me, but it might be great for you, JP, if your niche is 20 to 30 unit buildings. It may have a plethora of them, but that market might not have 80 to 200 unit buildings for me.
Okay, that's a great point. That hadn't occurred to me, but absolutely makes sense.
I can't just say that, there's definitely opportunity out there. I mean, we're working with folks that are buying deals that, 2 of our young guys, 25 and 30 years old, just bought a 20-unit apartment building for $175,000. And they got the bank to carry back financing for $125,000 of that. So the deal, and that was less than 4 months ago. There's deals out there.
So the market is one mental hurdle. Thank you for addressing that. Now, in terms of other mental barriers, limiting beliefs that are going to keep people from moving into the multifamily arena and seizing the opportunity that exists right now, those, there's some people who are listening to this going, all right, I'm interested. I feel like there may be an opportunity here for me, but ... fill in the blank.
I think the number one thing is the scarcity of money factor that a lot of people, put on the fact that, okay, I don't have the money to do this. You need a lot of money to buy buildings. Literally, like we said earlier, other people's money, people want to invest in consistent income producing property. In today's world, there's a lot of people looking for alternative investments. There's tons of people looking for alternatives. We raised $1.1 million in 45 days for our last deal. And that was through, a couple of investor meetings. That was it. There's a need and a want for passive investors to participate in multifamily real estate because of the consistency of the cash flow. And it's your job is to educate yourself on how to go out and find those deals and bridge the gap between, the deal and the passive investors and put yourself in the middle of it.